Okay, well, thank you all very much once again. I appreciate it, as you know. We're reporting for the end of a quarter, and so we have some IMF targets that Jamaica is expected to meet. Happy to say that we have met both of them. Primary balance, we recorded 50.8 billion, and the target was 40 billion. So we exceeded that quite handsomely. The NIR stands at 2.4 billion US, and the target was 1.4 billion US. So once again, a very safe margin by which we pass both of these critical quantitative targets for the IMF program. Revenue generally is on target, in fact, very slightly ahead of target, 0.5 billion. So not much ahead, but just a little bit. And revenue is way ahead of last year by 25 billion or 13%. And so I give you that number to just give you an idea of the big increase that has occurred this year. Tax collections, very happy to say, are ahead of target. I'm trying to recall whether this is the first time we have reported tax collections being ahead of target. But they're ahead by 5 billion, almost 2.6%. And that's quite significant. And they're better than last year by $26.6 billion, or 16% more. So in the past, we've been quite concerned, if not critical, of the tax targeting and the tax collections. And what they have shown us this quarter and this year to date is that they can achieve those targets even when they are more aggressive than last year. In terms of the taxes that perform beyond expectation, corporate tax over by 1.9 billion, and compared to last year, over by 3.1 billion. And I think this is an important tax because it gives you a signal as to how is the business community doing. And to the extent that they are paying more tax than last year and exceeding the budget for this year, I think augurs well for growth in the economy generally. Sales tax up also 2 billion, and GCT 1.9 billion. But remember, government is paying GCT now, so that GCT 1.9 billion more needs to be seen in that context. PAYE down a little bit. I was a little surprised, but not down by a lot, only $500 million. And customs down by 0.8 billion. But generally, I want to say the tax collections have been quite strong for the 6 months up to September of this year. Grants, however, lag budget by $3 billion, and that's not a small number. Normally, I would be very concerned about that, except that the tax revenues have performed so well that it can accommodate a little lag on the grants. But $3 billion is a big number, and I certainly hope they have plans to try and pull back that number in the next 6 months. Expenditure is down on budget, 13.8 billion. Wages in particular underspent by 3.9 billion at the end of September. But as I think many people know, in October, some of the back salaries as negotiated by civil service, etc., were paid. I think that amounted to 3 billion. So, as I think we said last time, that wage number is going to catch up with budget very shortly. Interest expense also below budget, 3.4 billion. But as I think we mentioned last time too, the cost of raising the 2 billion bond hasn't been booked as yet, and when it is, that interest costs will come in line with budget. Capital expenditure, however, down 6.5 billion, lagging 6.5 billion. And I'm told this has to do with just the inability of government to get those projects going. Doesn't have anything to do with holding back on the projects. That's what I'm told. Statin announced a number of very interesting economic pieces of data, and I just want to run through them for you. Inflation, 0.4% for September, which is pretty low. If you multiply 0.4 by 12, that's less than 5% annualized. But the 0.4 is down from 0.8 in August. So a good month for inflation. The main things that pushed inflation in September was education. Costs of going to school, college, books and so forth, up 5.3%. Food was up a little bit, 1.1, in particular starchy food, which is a direct result of the drought. But electricity was down, courtesy of oil prices, and transportation down also 1%, again, courtesy of oil prices. For the calendar year to date, that is from January to September, inflation is 2.6%. And for the trailing 12 months, so September this year back to August of last year, it is 3.3%. So generally, inflation pretty low. When you compare our inflation to that of the US, US has had inflation in the period January to September of 0.5%, and we have had 2.6. So the differential between the two is 2.1. The depreciation in our currency in that period has been 3.8%. And so there is a small gain in competitiveness of 1.7%. So our devaluation has run ahead of the difference between our inflation and US inflation by about 1.7%. I think that inflation for this calendar year could close out at anywhere between 5 to 5.5%. So I don't expect that 2.6 to grow much more for the rest of the calendar year. The trade deficit, starting announced that for the period January to July, it stood at 2.2 billion US dollars, which is down from 2.6 billion, and therefore is an improvement. And it is oil and food imports that are mainly responsible for that improvement. So a good development on that trade side, where we see that that trade gap is closing, continuing to close, I should say. One piece of economic news that wasn't so good was the Jamaica Chamber of Commerce index of confidence by business people and consumers. Both of those indices fell. The business confidence index fell from 128.2 to 110.6, and the consumer confidence index fell from 114 to 103.9. So these are not small changes, they are quite significant. And so I wouldn't say that they are statistical or within statistical error. They are quite significant. And the main reason given for that fall off is the slow growth. Are we really having economic growth? I don't feel it, I don't really see it. Is there a light at the end of the tunnel? It's that kind of feeling. Maybe too, a bit of uncertainty from the politicking that is going on, because it seems elections are pretty close. So maybe that feeds into these results a bit. Interestingly, the stock exchange index for the period July to September, which is the period that the index is measuring, that too fell. Didn't fall by a lot, it only fell by 0.9%, but nonetheless, it retreated in that period. However, from January to September, the stock market index has risen 26%, and from January to October, 72%. So what we have is a business consumer index down to September, but the stock market up for the year to date quite significantly. And it will be interesting to see what that business and consumer index comes out at for the quarter ended December. The 2016 World Bank Doing Business report came out. It showed that Jamaica moved up from 71, I believe, out of 189 countries to 64. So an improvement of 7 places in the Doing Business report. In fact, Jamaica was one of the top 10 performing countries globally, and the #1 performing country in the Caribbean. So that was a bit of good news. Also, good news, I think, is Statin reported on unemployment, that it had fallen for the period of July. It was down to 13.1% from 13.8%. So 16,800 new jobs were created in that period. I want to just corral all of this economic information and come to some kind of conclusion. So it seems to us that from government data, Jamaica will meet the most important IMF targets for the 10th quarterly review. The IMF team is in Jamaica now, and they will be conducting that review for over the next week or so. They will issue their report, and it will then go to their board. But it looks to me as if we will pass, because those quantitative performance criteria have been met quite handsomely. Inflation continues to be quite low, and this is positive for the economy. The trade deficit continues to get smaller, and this is positive for the economy. We mentioned last time that we have had 2 quarters of GDP growth, small but growing, 0.4% in the quarter of April to June, and 0.6% for July to September. Correct. So growing from 0.4 to 0.6. Of note is that in that last quarter's GDP growth data, every single sector of the economy grew. This is really important because it suggests, and I don't go any further than to say it suggests, that the whole economy seems to be rising in terms of growth. Tax collections ahead of target is another good sign for us. Unemployment down, excellent, because that's where the rubber hits the road. That's what we really ultimately want, unemployment down. And of course the stock exchange showing a lot of buoyancy and a lot of confidence. All of these facts lead EPOC to believe that we are on the right economic path, and that we should see more substantial growth as we go along quarter to quarter. So it is understandable that we are impatient to see more substantial growth, a little bit more patience, and I think we will see it in all of the succeeding quarters to come. I think so long as we don't have any exogenous shocks, meaning like, you know, the weather or economic calamities in the United States or in the world, terrorist acts, things that we can't control, I think that we are on a path for economic growth. Thank you very much. We'll take questions.